My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer America. Other people make friends. I'm just trying to make you a little money. My job, not just to entertain, but to explain all this stuff. So call me 1-800-743-CNBC. Tweet me at Jim Cramer. Remember today. Remember it because it's a textbook reminder of what happens when you decide the mega capitalization stocks are done, when you think that they're written off, when you decide the moment you give up on them, what happens? They come roaring back. Yep. While the market meanders, Dow inching up 124 points to a record high, although it was down at one point. S&P advancing 0.57%, also a record high. Nasdaq gaining 0.63%. The old favorites rose up as if by magic and began another run. I know what they are. They're almost like Santa's reindeer. There's Dasher and Amazon, Dancer and Alphabet, Prancer and Microsoft, Vixen and Apple, Comet, Meta, Cupid, Tesla, and, of course, poor left-behind Rudolph, the Nvidia reindeer. Let's start with Apple. All right, here's a company that's being highlighted as the second biggest loser in the Justice Department's case against Google, as Google paid Apple a lot of money to be the default search engine. Hey, why this is bad, this eludes me, okay? Google's the best. I'm glad it convinced Apple, which could have chosen an inferior platform, but the Justice Department wants the deal smashed so it would be terrible for Apple, at least theoretically, because Google pays them something like $20 billion a year for the privilege. So why is this not going up? Well, some of it's the residual impact from a piece of research yesterday. Morgan Stanley put out a bullish note about how iPhone upgrade rates are actually improving and the new Apple Intelligence might be making a difference. But you know what? I also think CEO Tim Cook, who's in China right now, when President-elect Donald Trump is actually talking about a 10% tariff on top of what we already placed on Chinese imports, that shows that he may be the only American business person to truly offer China a great deal and get one in return. In fact, I think Apple's up because the China tariff could have been much higher. If 10% is the opening bid, then you have to believe that things are a little more collegial than we thought. It's a good reason for the whole market to rally, not just Apple. If the relationship with China can improve, then Tesla's a big winner, too, as long as it doesn't improve too much, because the Chinese have some amazing electric cars that they're already facing 100% tariffs here. Still, China's a very important market for Elon Musk, the man who has Trump's ear. Not only that, but when Trump wants to slap a 25% tariff on Canada and Mexico and a 10% one on China, the Chinese might see that as an olive branch coming their way. Oh, boy. And of course, did I ever have the wrong view on Canada? Apparently, it's a hotbed of illegal immigration and fentanyl smuggling. Who'd have thunk it? Amazon's got a nod from Bank of America this morning. It's pretty generic. It's talking about the strength of e-commerce and the cloud and online advertising. Wow. Now, you could say, so what? But think about this. Do you know how many companies would love to get a nod like that out of nowhere, yet they almost never get them? These companies do. Now, the big gain in Microsoft is a little convoluted. This morning, Best Buy reported a subpar set of numbers, sending this charitable trust holding down pretty hard. Thank heavens we've been selling a lot of it ahead of the quarter. In response, we had to do it because we saw the earnings from Home Depot and Lowe's. But CEO Corey Barry said one of the standouts of the quarter was the AI PC, although it hasn't really broken out. I figure with the domestic computers growing at 5.2%, some laptops up 7%, some have to be AI. Barry explained that replacements and upgrading drove the gains. As she put it, quote, "We're excited about what's going to happen in the future to AI," end quote. Now, frankly, I actually regarded this as a tepid endorsement, damning with faint praise, so to speak. But you have to understand, winners get the benefit of the doubt, and Best Buy's presumed AI PC numbers can be read as a rousing applause for Microsoft's Copilot. I wish I could come up with a good reason for why Meta platform soared today. I mean, there are some amorphous positive comments about how Meta's smart glasses have taken China by storm. They're very cool. I get that. Pretty soporific, though. It could be going up because it's being buoyed by the myriad Magnificent Seven ETFs. So it's kind of like this, all for one and one for all. They all go up. I like a stock that can go up big on nothing, but I have no allegiance. It can therefore come down hard, too. That said, think of it like this. There's not a lot of supply on the way up. And on the way down, there's a company's gigantic buyback, hoping that it'll help cushion the blow. That's what I call an asymmetrical positive. And then there's Nvidia, the Rudolph red-nosed reindeer of the Magnificent Seven. Nvidia stock is struggling in a typical post-earnings miasma. We know that nothing's wrong. We just saw the numbers. They were terrific. Yet there's a growing skepticism that things have peaked, that the rate of growth is slowing, that the bang for the buck is lessened, and that the competition is increasing, especially from Amazon. Of course, we hear this every time. I want to unpack these supposed negatives, and not that I know who packed them. First, Amazon's not going to go into the high-end chip business away from Nvidia. It simply needs a regular supply of other chips. Nvidia has a shortage because they literally can't find enough manufacturing capacity to meet the demand. So Amazon makes some of them itself. What matters, though, is that Nvidia welcomes the competition, if you can call it that. I don't want to. Here's the deal, okay? Nvidia still has the best technology, by far, in my view. It has no competitors. Amazon remains a huge and, I am told, from both sides, happy customer. Next, has AI really peaked? I have so much trouble with this. NVIDIA's rolling out software as part of its stack, and I think that many people don't even know that what they have going for them. I don't think that people know they have software. Which brings me to Fugado. This morning we found out about a project that fuses sounds and inspires ideas, and not unlike what Shantanu Narayan does with Adobe. They put ideas out there to inspire, to get people thinking. Fugado, as CNBC's own fabulous Deirdre Bosa explains, is part of NVIDIA's moonshots. It's an AI idea factory product. It's not a retail thing, even as we can all play with it. What matters is that periodically Jensen Huang, CEO, puts out ideas that turn out to be very, very big, like his DGX operating system that actually began from NVIDIA's Shield, including its Shield TV. As usual, it's a little complicated to explain, but Jensen put Fugado out to get everyone thinking, and no more than that. No more. There's a lot of NVIDIA that's simply a big think, the sort of thing that good companies used to do all the time. But if they're costly and expensive, they don't get done anymore. I actually love these kinds of analyses. They don't depend on the Fed. They don't have anything to do with Washington, the beige book, whatever, with the possible exception of possible not China. It's just the usual blocking and tackling that these companies keep giving you that I love so much. Here's the bottom line. Don't begrudge the mega caps. Don't begrudge them. Don't spoof them. Don't even attack them. Just buy them. Joseph in Connecticut. Joseph.
Yes, hi, Mr. Cramer. My name is Joe. I'm from Connecticut. I want to buy 1,000 shares of Intel Corp. Do you think that it might double or triple in the next 2 to 3 years?
No, I don't think it will. I think it can go up slowly. I know that Qualcomm was rumored to be a suitor. Looks like they've cooled on that. Intel doesn't have the balance sheet to go up that fast, and it's just not going to be a rocket ship. It's just not. I would prefer you to buy AMD. Let's go to Sam in my home state of Pennsylvania. Sam.
Jim, listen, as you already know, the talk of the tape today was all about tariffs. And so my question is, we have this American darling, this great brand, Nike, and I'm curious what you think how investors should be viewing the stock with the potential overhang for tariffs in the coming weeks.
Well, it's negative, obviously, and we know that companies other than Apple have had a really hard time in China. I will say this. I know it's tempting. I think you have to wait one more quarter. We may need a clearing of the decks quarter before we really feel that Elliott Hill's got this under control. Let's go to Larry in Florida. Larry.
Hey, Jim. With the Blue Halo acquisition, possible cuts in defense spending, and lack of support for Ukraine, is all this just too much to start a position in AeroVironment now?
I think that AeroVironment will be and will have demand for many, many years because they represent the less expensive way to get things done. Remember, AeroVironment is unmanned. Most of the things that the Pentagon seems to want are very expensive manned. I think we take humans out of the equation if possible, and that's what AeroVironment does, which is why that stock remains a buy. As we see from days like today, the moment you give up on these mega cap stocks, they come roaring back. On Mad Money Tonight, what should you make of the latest round of retail earnings? I'm highlighting my key takeaways. Then Intuit broke out earlier this month from before falling after earnings. I didn't understand this, so I'm going to dig into what happened to the company behind TurboTax and QuickBooks. Plus, I'm checking in with the CEO of PC maker HP Inc., fresh off today's report. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.